Let me share something with you that most people don't want to hear. Many folks believe they're investing, but really, they're just delaying their financial concerns. They purchase ETFs, tuck them away in an account, and make themselves a promise: financial independence 3 decades from now. But here's the reality: not everyone makes it to that distant someday. Let me walk you through some numbers. If you invested a substantial amount, let's say $40,000 in SPY, can you guess how much dividend income you'd receive monthly? Based on SPDR's data, with their dividend yield sitting around 1.3% annually, you'd collect approximately $43 each month. Just $43. That won't even cover a nice dinner at your favorite restaurant. So I have to ask you, are you genuinely investing to create a more autonomous life? Or are you simply parking your money in what amounts to a high-risk savings account, crossing your fingers and hoping for the best? In today's video, I'm not going to teach you how to wait. I'm going to show you how to build. I want to introduce you to more than just 3 ETF tickers. I'm sharing a complete philosophy, a proven system that I call the cash flow engine. This system is specifically designed to generate genuine passive income month after month, consistently and with growth built into its foundation. And here's what makes this truly accessible: you can begin constructing this engine regardless of how much capital you're starting with. The fundamental concept behind the cash flow engine is straightforward. Rather than obsessing over how much your assets appreciate on paper, we're going to shift our entire focus toward building a dependable stream of cash that flows directly into your account with predictability. This income stream isn't dependent on whether the market surged or crashed today. It operates independently, and this independence is exactly what fuels your path to financial freedom. Now, just like any sophisticated machine, a complete engine requires components that function in harmony. Our engine is constructed from 3 essential parts: 3 meticulously selected ETFs, each engineered to fulfill a distinct role within the system. The first component, and honestly the most critical one, is the heart of our engine: SCHD, the Schwab United States Dividend Equity ETF. I want you to think of SCHD as your rock-solid foundation. It's your core engine block. This isn't some flashy investment. It won't promise to transform you into a millionaire overnight, but what it offers is power combined with reliability. Right now, its dividend yield hovers around 3.7% annually. That's more than twice what SPY delivers. But let me tell you about the real magic hiding inside SCHD. It's not simply about the current yield. It's about something far more powerful: dividend growth. According to my research on Seeking Alpha, over the past decade, SCHD's dividend distributions have expanded at an average annual rate of 10.61%, which is absolutely massive. What does this growth mean for your financial future? It means your cash flow isn't static. This year, you might collect $100 in dividends. Next year, you're looking at $110. The following year, $121, and the pattern continues. Your machine is essentially upgrading itself automatically over time. You're creating what I like to call a personal pension, one that increases annually and outpaces inflation consistently. To achieve this remarkable performance, SCHD exclusively invests in elite blue-chip United States corporations. These are titans with a documented track record of over 10 years of paying and increasing dividends. I'm talking about powerhouse names like PepsiCo, not just a beverage company, but a global snack food empire; Lockheed Martin, not simply an aircraft manufacturer, but a cornerstone of the entire defense sector; Verizon, Chevron. These are enterprises that have navigated through multiple economic downturns and emerged more resilient each time. SCHD represents stability. It embodies sustainable growth. It's the rhythmic heartbeat of your cash flow engine. However, even the most exceptional engine cannot perform optimally without a comprehensive protection system. This brings us to the second component: VYMI, the Vanguard International High Dividend Yield ETF. If SCHD functions as the heart of our machine, anchored in the United States market, then VYMI serves as our global shock absorption system. It ensures your engine runs smoothly even when you're navigating the roughest financial terrain. VYMI's purpose is elegant yet impactful: diversification. This fund invests in hundreds of high-dividend corporations located outside the United States borders, investors, from premier banking institutions in Canada to pharmaceutical industry leaders in Switzerland to energy sector companies throughout the United Kingdom. Why is this global exposure so crucial to your success? Because concentrating all your capital exclusively in the United States economy creates significant vulnerability. The world extends far beyond any single nation's borders. By incorporating VYMI into your portfolio, you're not limiting yourself to betting on America's future alone. You're positioning yourself to benefit from worldwide economic growth. VYMI provides a dividend yield of approximately 3.5% annually with dependable quarterly distributions. It may not showcase the dramatic dividend growth that SCHD delivers, but what it brings to your portfolio is stability, geographical diversification, and remarkable resilience. These characteristics are the hallmark of a sophisticated investor, someone who isn't merely chasing wealth accumulation, but methodically constructing a financial fortress capable of withstanding any economic storm. At this point, our machine possesses a powerful heart and a steady global suspension framework. Now it's time to install the turbocharger. The third and most dynamic component is QYLD, the Global X NASDAQ 100 Covered Call ETF. QYLD operates differently than conventional investments. It doesn't function like a traditional ETF. Its entire investment strategy is engineered to generate immediate cash flow by implementing a sophisticated technique. Imagine you own 100 shares of Apple stock. Rather than simply waiting passively for that stock price to appreciate, QYLD essentially rents out that upside growth potential for a brief period, typically 1 month. In exchange for this arrangement, it collects a premium, cash delivered upfront, and that cash then gets distributed to investors like you as dividends. What's the outcome of this strategy? An extraordinarily high dividend yield, frequently reaching double-digit percentages. Currently, QYLD is yielding approximately 11.5% per year, and these dividends arrive in your account monthly. This is your turbocharger component. It injects an immediate, substantial volume of cash into your entire system. But I need to be honest with you. Every turbocharger comes with a trade-off. In QYLD's specific case, that trade-off manifests as limited price appreciation. Because the fund is consistently renting out future upside potential, when the market experiences strong rallies, QYLD won't appreciate in value as rapidly as something like the pure NASDAQ 100 index. This is precisely why QYLD isn't an investment where you should concentrate all your capital. It's an enhancement, a specialized tool designed to maximize your monthly income generation. It's ideally suited for investors who prioritize cash flow arriving now over the promise of long-term capital appreciation arriving someday in the distant future. So what actually happens when we combine all three components into one cohesive system? Let's revisit our initial example using $40,000. Instead of allocating everything into SPY and receiving a mere $43 monthly, we're going to divide it strategically to construct our cash flow engine. You invest $13,333 into SCHD. With its 3.7% yield, that generates approximately $41 each month for you. You invest another $13,333 into VYMI. With its 3.5% yield, that produces around $39 monthly. And you invest the final $13,333 into QYLD. With its impressive 11.5% yield, that delivers approximately $128 per month directly to your account. Total monthly cash flow, $208. Now I want you to pause for just a moment. From $43 to $208, that's an increase of nearly 400%. Now, I'll be realistic with you. $208 monthly won't revolutionize your entire life overnight, but consider what it could accomplish. It could cover your phone bill completely. It could pay for your Netflix and Spotify subscriptions or handle your gym membership expenses. It could fund a wonderful family dinner with no second thoughts or budget anxiety required. But the genuine value extends well beyond the actual money. That $208 number represents proof, concrete proof that you've successfully built a system that actively works for you. Every single month when that cash deposits into your account, it's not merely money arriving, it's a powerful reminder. You're actively transitioning from being a person who waits passively to becoming a person who builds proactively. Financial freedom doesn't originate from owning the largest numbers displayed on paper. It emerges from owning a stable, predictable cash flow stream, one that's substantial enough to support the lifestyle lifestyle you genuinely desire to live. This combination of SCHD, VYMI, and QYLD isn't some get-rich-quick formula I'm selling you. These are professional-grade tools designed to help you begin constructing your own personal cash flow engine. A machine that's sustainable over decades, reliable through all market conditions, and grows increasingly powerful with time. Always remember this principle. We don't invest to impress other people with impressive numbers on a screen. We invest to reclaim our time. We invest to create a life that's intentional, peaceful, and completely under our control. So begin your research today. Start building your engine, even if you're starting with just a few dollars, because the journey toward financial freedom doesn't begin with having a massive amount of money. It begins with making a decision to think differently about your financial future. If you found this video valuable, don't forget to hit that like button and subscribe to my channel so you won't miss what I'm bringing you next.